Okay, everyone, welcome to the Sunday night strategy session, the market strategy session for the week of October 12th, 2015. Let's take a look at some economic reports coming up. First, on Monday, it is a bank holiday in the U.S., so volume is expected to be on the light side. But three FOMC members are speaking. Lockhart before the market, Evans during the market, and Brainard after the close. On Tuesday, German ZEW economic sentiment is scheduled for 5 a.m., but nothing really in the States. On Wednesday, core retail, regular retail, core PPI, regular PPI are all pre-market. Business inventories at 10, the beige book at 2. Now, the beige book is a yellow, so I really don't care about it. Used to be an orange, though. On Thursday, CPI, core CPI, weekly unemployment claims, the Empire State Manufacturing Index, Philly Fed at 10 o'clock. Dudley speaks at 10:30, and crude oil is at 11. The reason that crude oil is on Thursday is because Monday is a holiday. On Friday, 10 a.m., preliminary University of Michigan consumer sentiment and the JOLTS job openings. Before the market, just before, 15 minutes before, you got capacity utilization and industrial production. So it's a pretty busy week. Lots of reds here. A lot of it is pre-market, but there is stuff that can move you if you are day trading. The big question now is the low in? Is the low of this correction in? Are we going to new highs right from here? Or are we going to go back down one more time before we get the big bounce? Well, I mean, the bulls right now are, really making the bears look foolish once again, because every time it looks like, hey, maybe we could roll over, they just keep going. Last week was the best week of the year. We closed over the 50-day moving average, but we're not out of the woods yet. We still haven't surpassed the September correction high, at least in the S&P. Also in the let me check the NASDAQ. Also in the NASDAQ, I thought so. The only one we have surpassed it in is the Dow, and got to be real careful using the Dow as your leading index. I don't use it as a leading index. Paul doesn't use it as a leading index. We watch it, of course. We always want to see the inter-index relationships between the Dow, the S&P, the Russell, the NASDAQ, the mid-caps, but we don't consider the Dow to be a leading indice. And it is the one, or index, I don't know, indice? It is the one that I always screw up at least two words. I think that was one a week. So the Dow being above the September corrective highs don't mean much. That is my firm and correct opinion. My obnoxiously correct opinion, right? So we still have to get over the September corrective highs in the majors. And of course, we still have to get over the 200-day moving average. That being said, I personally have moved from I think we're going back down stance to a neutral stance, because we did get over the 50-day moving average. The Russell barely did, but did manage to close above it for the week. Now, one thing to throw cold water on this, of course, the 50-day is sloping down. So the fact that we clipped over it, I mean, some people would say that is a stronger sign because we had such a nice sharp move to the downside. And of course, we had the death cross back here. You know how much Paul loves those. And of course, they don't test out well at all. You can't make money playing the golden and the death cross. We know that already. So the real question is, are the lows in, or are we going down? We're entering a period of bullish seasonality. We have the last quarter. Are they going to mark us up? What are we going to do here? All right. So with that being said, I am going to turn over the microphone and slides to Paul. And Paul, please text me when you're done so I can process the recording because I will more than likely be asleep by the time you're done. So just make sure you text me when you're done. I'll come in and I'll get the archive posted.
Dude, I can't see
I know,
the
I know,
stuff.
I know. I don't know why, but I don't know what you did with your password. It was working for a while.
My password?
Yeah, remember you didn't know, always used to have to do this, but it's all right. It doesn't matter. I mean, you're good now. All right. Don't forget to text me. Thank you.
Okay. Yeah. All right. Good evening, all. Those of you who are off tomorrow, I'm jealous and enjoy your day off. The rest of us will hold up the economy for one more day. So we start the week. Bulls had a great week. If you've read my blog over the last, it's got to be 6 weeks, I spelled out exactly how the market would bottom. So I'm just going to pull up the S&P for argument's sake. And I talked about, post-crash behavior is somewhat predictable. And we had our crash here. And I was looking for a rally, which we got in spades. And then a secondary low to be put in sometime in early to mid-October. Well, it came, I think, was it Sep 30 or where's the low? Well, it was 929. So it came a little bit earlier than I thought. But this is kind of textbook post-crash behavior. It's why that after we crashed, I essentially was and have been fairly bullish, and I'm still bullish. I thought when this day came, I said, there's no shot. This is a low over here. It didn't fit in with any of the historical precedents. This fit in much better, although it still wasn't perfect. The perfect low would have been a flushing out of the intraday low, which on the SPY, it's not valid. Sadly, because of the computers, you have to go back to the index. So we got really close on the index to flushing out the August low. It did not. Is there a precedent for this? You better believe it. The crash of 87, the crash low was never flushed out on December 4th. The mini crash in 89 was never, the crash low was never fully flushed out. And the early 1994 little crash, same thing. I've been using 1998 and 2011 as the best analogies, and both those saw flush outs to the downside. We did not here. Tiny just said, talked about, scenario, are the lows in, or are we going to come back down again? And I think I said this last week. If we do come back down again, then the whole post-crash scenario that I pointed to for the last 6 weeks is out the window because you're not supposed to. The idea is now you've trapped all the bears. If you're a bear, you are trapped in the fetal position and sucking your thumb. So if we roll over again and come down, it throws my entire post-crash research, it voids that study. It does not conform to any post-crashes. So the likelihood of this happening is small, and that would also mean that a lot of other studies that I've done, one that I think I mentioned last week and I wrote about in the middle of this week, that points to a 10% performance in the stock market this quarter, all that stuff would go out the window. So it'd be really unusual for stocks to roll over again and take out these lows. That would usher in I don't actually know. I don't know. I have to go back and look at failed attempts, and there aren't many. So a total collapse here. Now I could see stocks rallying, back to 240, 2040, and then putting in a secondary low, 2000, 1980, somewhere in here. That would be fine. But I don't think that we're going to roll back over to the downside anytime soon. If I have thoughts to the contrary, I will certainly share them. But this has really been, if you read my work, it's exactly how I've laid out since this day. So let's dive in and talk about where we are. Tiny's conservative in that he likes lots of confirmation before he takes a firm stand, and there's nothing wrong with that. That's his modus operandi. He mentioned that we finally got above the 50-day, but the 50-day is still declining. I have a different approach. That's not better or worse. It's just my approach, and I like to look for spots where the market is really stretched in one direction or the other, and I don't like to wait for markets to curl up above a moving average or the moving average to flatten out. I like to get involved early, and if I'm wrong, I'll stop out and come back to fight again. But there's so much gain to be had in the first part of the rally. It's where it starts off as short covering, and all the pundits say, it's a bear market, it's short covering, it's not a real rally. And then all of a sudden you squeeze the arms of the bears, and before you know it, they're in the fetal position. So we had a pretty good run. From this low, it's been really a straight up run. We have a pause day on Friday. I certainly would not be shocked here if we paused again. But there should not be any kind of meaningful decline. Okay, my only caveat would be, I don't know, some kind of big geopolitical event. But that the markets can never forecast or look into. All right, so let's go back to the Dow. Here, pull the indices. Here's the Dow. Dow is, as Tiny mentioned, above its post-crash high. Is that important? I mean, yeah, it's important, but it's not. I don't think it is going to be useful in any kind of forecasting tool. Why is my 1 second? There we go. Dow's been stronger lately from a chart basis, but as I mentioned last week, and I took it and I bought it for my account and some portfolios that I run. I thought the Russell offered the best risk reward because the Russell's the only index that took out its low. So when it was going to bounce back, it should the initial bounce in the market should be very strong in the Russell, which it has been. And then once this advance begins to peter out, then you transition into the indexes that are leading. So the Russell took out its lows like the other indices could have or maybe should have, and then it bounced very hard over the last week. I talked about the S&P already. It had a nice run. You can't deny this run. It's right back into the high of September, a very logical place to pause and try to refresh a little bit. Mid caps. It's kind of the same thing. They're right up against the September highs. Could they pause here? Sure. Would I start to place things to the short side yet? I personally would not. And the Qs, I keep pulling up the ETFs, but I want to use the indices instead. The Qs clearly are the stronger index. And when did I buy the Qs? On Thursday, I sold half my S&P position and went into the Qs. So now I own the Russell for half a size position and the Qs and the S&P for quarter size positions. So that's where I am right now. Europe, Um, I talked about this last week. I bought Europe this week also. But a couple weeks ago, I talked about keeping a firm eye on Europe, blah, blah, blah. I just had a very tough time figuring out what to make of this. This is really sloppy. It's, I don't know, it's not conforming to anything historically, but I did buy Europe this week. And emerging markets, I've done absolutely nothing in. Zero. I don't have a position. I'm watching them. They've been decimated. They should bounce hard, which they already bounced, 20%. But I have not yet pulled the trigger on any emerging market positions in size. China. I don't know. I guess I'll be waiting for Godot. I'd like to wait and buy below. I was hoping to buy below 30. Now it's 38. So what do I think? Did I miss the trade? I may have, but I have an interest in buying China anywhere up here. And Russia, which you guys asked for, Russia looks a little better. So I kept saying no, 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 no. Now Russia is certainly viable into any kind of weakness. It's worth a shot, I'd say. Brazil, I liked. I've liked it since down in here when the debt got downgraded and it was left for dead. I think Brazil trades fine. That's it for now. Let me pause and see if you have any questions. Okay. Dow is nothing but the score on the board. Let's see. Doji. Yep, Paul, you're right. Doji on the indices, but a Doji isn't a really strong candlestick signal. Could be a little pause and refresh. The Dow being somewhat stronger, would you say that the big money guys are mainly buying the more solid companies? No, don't read too much into the Dow's outperformance. I mean, again, the Dow's 30 stocks, and they're not well diversified stocks, so I would not read so much into the Dow. So look at the other indices first. For me, I like looking at the Dow at the end of a rally when I'm like scrambling to buy something because I know usually the Dow holds up at the end. At the beginning of a rally, I kind of want to buy the junk, the crap that's been beaten down the most. So for me, I wouldn't look at the Dow that much at all right here. Let's see, Kurt. I think EWZ trades fine. It's had a big run already. I've mentioned, no surprise, I've mentioned it every week for the last couple of weeks, waiting for a trigger. It trades fine. It's just a little extended, having run from $20 to, what's it now, $25. So, but I think it trades fine. Do I think that earnings season can cause a drop in the indices, Fred? I do, but I think that people don't have high hopes for earnings season. I think the expectations have been really diminished into this earnings season. So could they be bad? Sure. Do I think they'll be bad? I don't. Calendar-wise, once we get by, what's today? Today's the 11th. So you get through another week, 10 days. It's not impossible, but it's harder and harder to get a significant decline going again as the calendar matures towards the year end. So if there was weakness, my first reaction would be, Fred, to buy weakness. John, would I look to sell if we approach 200 day? Absolutely not. So let's just take the S&P, but I don't care which index you use. So the 200 day is up at 2061 right now. In all likelihood, if the S&P gets up into this zone, it's going to pause. But I don't think, the higher you go, the less and less likely that you're going to come back down. You've got some pretty solid double bottom here, which targets, 1865, 2020, 35, 55. This targets to back up 2100-ish. So I'm really looking at, my thinking is going to be, until I'm proven wrong, I'm buying any and all weakness. So selling at the 200-day would not be my plan right now. If other things lined up at the 200-day, then Tiny and I would talk about it. But right now, I'm a buyer in a weakness. Johanna, Eden, and Nora. I don't even know what these are, Johanna. You always get me on some of these. I don't know what Eden and, is this Nora, Norway? What are they, Johanna? And while you're typing, Jesse, I can't answer for you. If you bought something and it's doing well, you always have to try your stops up. Don't turn a winner into a loser. I've done that enough in my life to know that it really is a crummy feeling. Let's see. May, I don't think investor confidence levels are going to amount to much right now. I'd probably go back to them in the first quarter of next year, but I don't think they're going to amount to much. I mean, the pessimism has been rampant. I've mentioned it every week since, I don't remember now, so it must be since August. At the August lows, you had every single indicator I follow, with the exception of maybe only a few, that were screaming buys. So I've had the same thinking. This is post-crash behavior. Look to buy the secondary low. It's going to take a while for this confidence, for the bearishness to wear off. So I think, again, buy into weakness. Dimitri, I think if we get some weakness, it's going to be shallow and mild. So I wouldn't be looking to look at any kind of significant retracement. You're not supposed to. Right now, the market's got the bears by the short hairs, and they're squeezing them pretty good. You're not supposed to let them breathe. Dave, mutual fund tax loss selling. You have another, what's that, 20 days left calendar-wise. Usually it's over by the end of October. Oh, Johanna, Eden is Denmark's symbol. Okay. So Norway. I didn't even know this. So Johanna wants to look at Eden, which is Denmark. Oh, there it is, Denmark. Duh. I don't really have a strong opinion on this. It didn't correct that much. It's, to me, a pair of twos. Not much I can glean from this. And now it came up, the name. Why did it come up before? And Norway, I like Norway more than Denmark, only because it looks more like a completed pattern. You've got a huge decline and a little rally in your secondary low, and now you're squeezed. This one looks like the stock market or the emerging markets, EEM, where you can buy weakness in here. Let's see. What do I think of leverage funds? Bob, I was one of the first investment advisors to use leveraged mutual funds in my practice. I think it was 15 years ago. And so I got burned really badly using them. So I always have been a little gun shy. Perhaps wrongly so. I just don't like trading with leverage itself. Besides the fact that you have to be right about the market, because of the way leverage works and compounding, you can get the move correct and still lose money. leverage mutual funds and leverage ETFs are made to be traded. I think the longer you hold them, the worse you do. So be very careful. Okay. 4 key sectors. Semis. Trading a little better for sure. Came down. Secondary low. Trying to rally. They're above the September peak a little bit, kind of, sort of. But semis, we talked about it for months. They need to step up, and I think they are stepping up. That's a mild positive. The trannies, same thing. We talked about it for months. Huge decline the whole first 8 months of the year, and they too, like the semis, are stepping up. So 2 out of the 3 key sectors are behaving well. Banks. Friday was a really crummy day for the banks, but they are stepping up as well. So you don't have any laggards in the 3 key sectors. First time I've said that essentially all year. And I'll throw in XLY because I keep talking about it. I said this phrase that Mark Twain said, rumors of my demise have been greatly exaggerated. Consumer has been left for dead every year since 2009, yet we're only 1 month away from an all-time high in consumer discretionary. So you've got 4 sectors I just gave you that trade fairly well. Let's see. Software. Boom. I mean, software was the leader before the crash. Software really crashed. And then look, software is leading again. So if you're looking for a trade into weakness, buy software. That's a goodie. Telecom, I waited all year for this, and it's rallying, but it's certainly not rallying anywhere where I thought it would be rallying. So that's kind of a crummy pick for this year. Oh well. Diversified financials. I think the banks trade better, so I would rate them. I'd rather look at the banks. The regional banks, which I don't pull up that often, they look a little better than the big banks. So if I had to choose among the whole financial sector, I look at regional banks first, then the big banks, and then diversified financials. Retailers. I'd much rather play XLY than XRT. Looks okay. I think XLY is much better. And the home builders, which I've been on all year, and I do think they are going back to all-time highs. Let me see something. Where are we? Okay, so we got a ways to go. Let's go into healthcare, which I still own and I added to. What do you guys notice about healthcare? Anybody notice anything about healthcare? Thank you, John. John said it's lagging. Yes, it is. So I've owned healthcare all year, and I think I bought it last year. First time that I can say this has been a terrible move for healthcare. It's the Hillary Clinton decline and an absolutely pathetic bounce. I bought some more last week, but in all likelihood, over the coming weeks, I'm going to have to transition out of this finally and move on. And guess what? Biotech ain't far behind. John can make the same comment. I bought more biotech last week. This is really lagging. Terrible, terrible action in biotech. Terrible. So if I have one position I'm the most concerned about going into the week, this is it. This is really worrisome that the bottom is going to fall out once again in biotech. So I am certainly not thrilled here. XLI, which has stepped up big time. I said I had no interest in it. It's had a really nice run, and that's one of the reasons why the Dow is doing well, because it's got some industrial companies in there, like General Electric, United Technology, Boeing. That's a really nice run, and certainly you can't hate it that it's above the September highs already. So it's not a leader, but it's certainly trading well. And XLB, which I've not liked all year, and I kind of poo-pooed at the bottom, looked like the Russell, has had an amazing run here. Beauty. The Caterpillars, the Deers, etc. On the defensive front, REITs, they trade fine. I just think for me, this is too sloppy. I don't like the way this trades. So I have no interest in buying REITs. And utilities, they're kind of the same. It's a little sloppy down here for me, which you could say the same thing about telecom, which I mentioned earlier. It looks a little sloppy. The only defensive sector that's trading well is consumer staples. Not only is it trading well, it's on a chart basis, it's the #1 sector. I mean, this has been a beautiful move. We're only a couple of weeks from all-time highs in consumer staples. And this is more of a recession trade. So this is a kind of a head scratcher. As I yawn, my apologies. I took my wife and the 3 kids and their friends to my aunt to Six Flags yesterday for Fright Night. We didn't get home till, I can't remember, it was late. It was 11:30-ish. And today I coached my little guy's baseball second game of the weekend and worked out with my daughter at the field, and I hit golf balls, and so I apologize. This is a head scratcher. Not that it's doing well, but so is discretionary doing well. They typically do not do well together. So I can't explain it yet, but I gotta give it some thought. But it's just kind of note. Gold and silver stocks had a monster week. Boom. I'll tell you, this day really faked me out. Thursday, they had a late day collapse. I mean, I blinked. They were up big, and then I blinked, and they closed at the low of the day. Boy, that runs over. That is a really ugly candle. Well, the next day they opened up and closed at their highs. So I don't know what to make of this right now. This is not a typical gold and silver stock bottom. They don't bottom like this. They bottom in V. So I don't know. It's stumping me. And it's too hard to pull up the internet sector now because of this ridiculous. You know what I could do? I could pull up the RightX. No. Internet mutual fund. There's internet. Good. And that looks pretty good to me. Double bottom, and it's leading again. It's above the September high. I liked it before the market went down. Internet's another good sector right now. We're finding a lot of good sectors. They've repaired themselves nicely. Not the kind of action you normally see if this is a bear market or we're about to collapse again. I know a couple of you guys like TAN, the solar sector. I said last week, you have a nice double bottom in place. I have no problem trading into the long side as long as you agree to get out if it makes new lows. This has been a nice move in TAN. Let's see. Johanna wants insurance. Hey, Johanna kind of looks like the banks, the regional banks. Looks similar, insurance. So it's certainly a leader we're finding. So we're not finding a lot of sectors that look kind of crummy. Biotech, which is one of my biggest holdings, wonderful, looks probably the crummiest of all the sectors. And I'm glad I'm holding it. But most of the sectors look pretty good. They've done some nice repair work, and their time to shine is now. It sounds kind of cliche. Time to shine is now. Any other questions on sectors? Oil, I didn't cover energy. Thanks, Rick. Forgot about that. XLE had another beautiful run this week. No complaints there because I still own my OIH. I did sell some OIH on Wednesday. This is like a too far, too fast thing for me. I think I sold half or a third of what I own. I don't think the run is over in OIH. I do not think the run is over. I think we're going higher in OIH. Crude, which I argued with one of you, I forgot who I argued with. But this, I felt very confident that this was going to resolve itself higher because the last time we saw it, which was up in here and in here, it both resolved lower. And I did not think the market was going to give us a three-peat. So it's been a beautiful break out of the pattern in oil. Pause day on Friday. Maybe we pull back a little bit, but oil should have another run coming. Only problem is that Dennis Gartman is now all of a sudden bullish on oil. You know, a month ago he's calling for $25. I think he called for $25 right here. And then oil took off, and then he became bullish on oil up in here, and then it consolidated, whatever. He's terrible. So that's oil. Here's natural gas. Still nothing. I mean, this is the thing. The bottom just keeps chugging away. Eventually we'll hit bottom, but I can't tell you if it's time to trade it now. It doesn't have the feel. Kind of glad in oil that's gone up because I just bought, as some of you know, I burn a pellet stove in my house. But oil's collapsed so much, I bought a winter's worth of oil at $1.85 a couple weeks ago. I think it was a couple weeks ago. So now I feel like I'm really smart, at least for a couple of days. Now when oil hits $25, I'll be the idiot again. In any case, there's heating oil. It looks just like crude. We covered natural gas. Here's copper. Copper's been kind of wild lately. We talked about this below, and I said it right now. You get a hammer and a bullish engulfing. You can absolutely buy copper as long as it doesn't close below here, which it hasn't. So technically, if you followed that, you're still, kind of long copper. It should go a little bit higher. Commodities look like they have a little bit of a tailwind. Copper should continue higher. I just wouldn't get married to any of this stuff right now. I think you got to trade it actively. Gold. It feels like gold's had a much bigger rally than it has. But I guess it's because when it does rally, it's been rallying in big, tall green bars. It really hasn't gone anywhere for several months. I mean, gold looks like it wants to resolve itself above this peak right here. But do I have huge conviction? I don't. It just looks like it wants to resolve itself higher. Let's see what. Let's look at questions. See if we have any questions, and then we shall move on. Oil, okay. Henry, I do think the low is in oil, but I've said it before. What the heck is? So Henry, here's oil. I felt really strongly this is the bottom in oil, right there. And then we had that rally. This is a 50% rally we had. I thought I was a genius. Then we had a 40% decline, and I was an imbecile. Now we've rallied. So do I think the bottom is in oil? Yeah, I do think the bottom is in oil. Let's see. I'm going to get to fixed income in a minute, guys. VIX. I mean, if you took our class, where did the VIX? Wow. So in our class, from the market timing class, the VIX gave a buy. I'm sorry, the VIX gave a market buy signal right at the low. Wow, that is pretty amazing. Right at the bottom, October 25th, our VIX system gave a buy. I have no opinion on the VIX in here. To me, it's a coin flip. I'm kind of pissed though, because I've had XLV on my screen, and like 6 times I put trades in. I'm sorry, 6 times I queued up trade to buy the XIV, and 6 times I didn't execute it, and now it's up, I don't know, 15, 18% from where I was trying to buy it, so now I feel like an idiot. Not the first time, and it won't be the last. Okay, let's do fixed income, other commodities. So here's TLT. I'm going to say the same comment I said the last probably couple of months. It's trading really sloppy, and I don't have a strong feel either way. I'm not going to say if it goes up, wow, I knew it was going to go up. I don't have any feel for TLT here. It's too sloppy for me to offer you any kind of meaningful comment. A 10-year yield chart. I don't know. Shrugging of the shoulders for me. Junk bonds. Junk bonds have emerged from the dead. Last week I said it's imperative for junk bonds to step up. Imperative for this bull market in stocks. And they look at this run in the last week and a half in junk bonds. This is a phenomenal run. And let's not forget, it's because there's so much money in energy and metals junk bonds. So the energy rally has certainly helped the junk bond market. And I don't think the rally is over. I think you're going to have, I think you could have an entire rally in junk bonds into the new year. That's JNK. Here's the PIMCO one. Same thing. Just a beautiful run, which I don't think is over in junk bonds. AD line, I don't know, there's nothing to glean from this. Tiny likes to look at double bottoms in indicators. I don't. I'm not saying he's wrong and I'm right or vice versa. I just don't do it for myself. I find it funny. I forgot who told me when I was getting bullish after the crash, October 24th, 25th, the same guy, the same time, this guy gave me his perfect sell signal when the 50-day crosses below the 200-day, aka the death cross, in the AD line, it's a bear market. So that was right at the low, if you follow that. I don't have an opinion here. Here's the NDX, looks like the same. So no opinion in the AD line. All right, and now we're going to move to the other commodities. Oh, commodities. Let's go to wheat, and we have some really nice moves in the commodities. Wheat, I said last week, looked pretty good. It did not end the week well. It's probably end the week where it started, but it sold off pretty good. Now it's rolling over. I'll downgrade my opinion in the short term on wheat to neutral, although I do think wheat's got the intermediate term. It's got more rally left in it. I think it's heading up this way. And corn, it's kind of same as wheat. Pulling back, nothing more but neutral in corn. I don't have a strong opinion there. But beans, I think I still like, if I remember correctly. Yes, I still like beans for a run. Remember we talked about it. This hammer and then this. I love this pattern. It tested our metal in here. Hasn't gone anywhere yet, but I think beans offer some upside right now. Sugar, on the other hand, has been a monster lately, an absolute. We talked about it last week. Here's what now is concerning me in sugar. I'm glad we talked positively of it during this run. However, smart money has now begun to get out of sugar. So it doesn't mean the rally is over. It just means that usually the easy money is in sugar. This is some run in sugar. Here's cotton, where I said last week, if I have to do anything cotton, I want to play it to the short side. Had a big day on Monday. Yeah, big Monday. Now it's trying to roll over again. I still think cotton goes lower. I don't think we've seen the lows in cotton yet. Cocoa had a huge down day. No, it was last week. I'm wrong. My memory was wrong. That's what I was remembering. A little crashette in cocoa. Yeah, it's oversold, back into support, but I don't really have a strong opinion in cocoa. And coffee, we talked about over and over and over and over and over again as to either be long coffee or short Starbucks. I love this little move out of the low, consolidated, and now it took off again. Coffee still looks higher to me. I'm watching this all year long. Still looks higher. That's what Starbucks looks like. And Starbucks is at, wow, I didn't realize, Starbucks at an all-time high? No, is that right? I did not see that. Oh, Paul. Yep. You stink. Yep. Starbucks all-time high. Wow. I was asleep at the switch. This will be very interesting if coffee continues to rally. I will, now don't forget, it's not, coffee is only one input cost into Starbucks. I'm sure the real estate is a huge input cost, as is labor. And I'm not a fundamentalist, so I can't comment on what the ratio is. But I like to trade long coffee, short Starbucks. But wow, look at that all-time highs. I didn't see that. Whew. Okay. Any other questions, comments, concerns? Scott said there's no inverse relation to coffee futures and Starbucks. They're totally hedged. Is that right, Scott? Confirm? They buy their coffee from the farmers in advance. You know, here I gotta remember. I'm gonna get a correlation done of coffee to Starbucks. I gotta spend time on that this week. So I will report back next week. I'm sure someone else has done it a million times over, but I'll do it myself anyway. Let's see what kind of correlation there is, or inverse correlation between the price of coffee and the stock price of Starbucks. Kevin, is there a question or just a? I'm not sure what you want, Kevin. Other questions, comments, concerns? What does the SPY look like? To me, it still looks good, Marv. I've said this since the crash, that post-crash behavior, this often says this is the low. You can buy it early, you can buy it late. I think you could pause for 1 to 3 days, maybe not pause, maybe go sideways, but I think ultimately we're going to head back to 2040, pause there, and then I think we're going, I mean, I'm a broken record. I think we're going to all-time highs. And then once we get there, I will talk about Dow 20,000, Dow 22,000, etc. But I think we're going higher. Oh, general outlook on retail, Kevin. Is that what you're talking about? Retail. XRT. I didn't like it as much. Here's XRT. I did not like it as much as the consumer discretionary. It's part of consumer discretionary, but I'd rather buy the discretionary sector than buy retail. It's too early for me to think about, holiday stuff. Maybe I should, but I like the XLY better. Let's see. He says, Scott, I said in my blog about the water's warm. Come on in. Does this mean? Yeah, Scott. So I think I gotta look and see if I even published it in my blog. So here's, of the many studies I've done lately, I'm going to publish one probably tomorrow or the next day. Oh, here it is. Down August and down September, historically, it's 6 for 6, and it leads to a 10% rally on average. 2011, 11%, 2001, 10%, 1999, 14%, 1990, 8%, 1985, 16%, 81, 6%. So that's pretty powerful. I do think that the year-end rally has started. So again, if the market begins to roll over, then something else is at play that I have not even contemplated. Could I be wrong? Of course I could be wrong. I'm playing to the long side. I think I'm going to continue to buy weakness until I'm proven wrong, or until my models say that something's up and that we need to change sides. Let's see, Jesse. If not today, next week, can you start looking at meats as well? Hogs, cattle. Yeah, Jesse. All right, so we'll talk about lean hogs, Jesse, and live cattle. Just let me know, and I will. Okay. If I don't, remind me. I got to actually read up on what the heck's going on in the market, just so I'm not a complete idiot. I'm only a partial idiot. Alan wants to know about shorting the Qs. I mean, everybody has different time frames. I think the Qs are going higher. Could they pull back for a period of time? Certainly. But I'd rather buy them into weakness than short them now. If you're a short-term trader and you trade differently, by all means, follow your own modus operandi. Just always make sure you have a stop in, whether it's a mental stop, an indicator stop, some kind of way to tell you you're wrong. So you don't get totally clipped. Oh, I didn't cover the currencies either. Thank you, Alan. God, man, I missed. All right, let me just do currencies. The dollar. Short term looks crummy. Intermediate term, I still think this resolves higher, and long term, I think the dollar is going much, 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 much higher. But short term, dollar is under pressure, probably continues lower. That's about that. I own some FXE and I own some FXY. FXE looks like it wants to go higher. So we're a couple of days out of it. Yeah, I mean, FXE looks like it wants to go higher. Do I think it can go very far? No, but it certainly could run. And the same with FXY, which I've been long for a while. I hate it long term. I think it's going to go down another 50%, and it hasn't gone anywhere since I bought it, really. It's probably right in the middle of the range. Maybe it could poke up $1, and I could get out with a little profit. If not, oh well. But I think long term, FXY is going much, much lower, as is FXE. Ron, TLT I covered. I don't know. It's sloppy, and I have absolutely no conviction in it. So it's a head scratcher for me. And JNK Junk has had a phenomenal short covering, short squeeze rally because energy's rallied. I think it's going to go higher. Look, I think junk bonds could rally right into the new year. If everything else sets up, you'll be talking about this in the new year. I mean, how far could it go? I don't know, but spreads widened an awful lot. So maybe spreads could come back in by half, which would still be a pretty good rally in junk bonds. Should the Fed initiate a new QE or raise rates? Well, I've been on, so those of you guys who know me a long time, I've been on the QE bandwagon since '08, and I'm still on it. I don't think it's done enough. Now, it certainly is the law of diminishing returns on it. Each round produces less and less effect, but I don't think they should raise rates. I do not. They're not going to raise rates in October, so I feel really confident about that. The Fed's not going to raise rates in October, and I think they should sit in the sidelines and do nothing. That's my opinion, and I'll talk about that a lot more in the coming weeks. John, why do you play? Oh, so John said, why the heck do you play FXY to the long side when I hate it long term? John, it's simply because in one of my strategies, which is a global macro one, my quantitative screens it hit up as a buy. But my long-term opinion of FXY has not changed in years. And that is, I think it's going down. So I was bullish FXY, did a good job. Here, and after I got clipped here during this decline, I became a seller into rallies. So made money, lost money, became a seller into rallies, and now I am firmly on the bearish side the whole way. So I think you could sell any rally in FXY. I think long term it's probably going to 40. But the trade I have, John, is simply because one of the strategies, which is purely quantitative, wants to own it. MLPs for Jay. I still own AMJ, Jay. It's been a great little short squeeze after getting absolutely air-holed the whole way down. I mean, I remember thinking, okay, is this the bottom? Okay, is this the bottom? And now, I mean, I hate long red bars, as you guys know, especially Ron from Hawaii. He knows I can't stand tall red candles. This does not look like a serious bottom, but you can't ignore the huge price depreciation. So head scratcher down here for me. But I still own, I have almost a kind of a semi-permanent position in AMJ in my dividend portfolio. Let's see. Ever play Dust, Alan? Yeah, the problem with Dust for me is I hate leverage. So I'm really hesitant to play stuff with leverage, except for maybe a 1 to 3 day, 1 to 5 day trade. So I have played Dust, and frankly, I would have bought it right here at 16.29, and then now it's 13.61. You know, and you're down and hurting. So I'm not great with leverage. There are a lot of people, the whole world plays with leverage better than I do, so I don't play with it. All right, last call. Going once. Going twice. As I set up my text to go tell Tiny to turn. Okay. Scott, no media this week. I'm going to Baltimore. So if any of you guys live in Baltimore and want to grab a drink, I'm there part of the week. Other than that, and I'll probably look to try to schedule a media when I get back. But Scott, I think you watched Charles Payne's show. For me, it went from being all market stuff for an hour. Now there's only 2 segments an hour on the market. So, you know, it's a big trip for me to go to the city, and it ends up being about 7 hours of my time because I leave at 2 and I get back at 9. So with only 2 segments, it's not as appealing to me. So, all right, everybody have a great week. Stay out of trouble. That's it. We'll see you next Sunday. And now Tiny can wake up and turn off the webinar.